stocks continue their rally today, even with those disappointing housing numbers and renewed concerns in Europe over debt. So what's keeping investors buying? We've assembled a Taking Stock think tank to tell us more about it. We have Charles DeVoe. He is the Chief Investment Officer and Portfolio Manager with International Value Advisers, where he manages the $2 billion IVA International Fund, as well as the $9 billion IVA Worldwide Fund. Also with us, our senior markets correspondent, Julie Hyman. Good to have you both with us. Julie, great to be with you. Charles, let me put it to you first. You've described the markets right now, at least in the United States, as bifurcated. What do you mean by that?
What I mean, Pimm, is that never, as far as I know, have large cap quality stocks such as Walmart, Microsoft, Johnson & Johnson been so cheap relative to small and mid cap stocks. Just last year alone, I think the S&P was up 13.5%. Many small and mid cap stocks were up 20, 25%.
Have you seen that too, Julie? I mean, you see that idea that people are going into large cap stocks. Why? Because they want those dividends, and they take a look at bond yields and they say, we might as well get a dividend that's more than a 10-year note.
Well, and you tend to see sort of the cycle flip that Charles is talking about, right? Where in the earlier stages in recovery, the small caps tend to outperform. That's what we've seen over the past few years. So you're certainly not alone. A lot of prominent investors have come out and said, you have to now switch over to some of the large cap value stocks. It's sort of early on in the thesis to see whether you all are going to be right, because you still don't necessarily have the bifurcation splitting, if you will. In other words, the large caps haven't pulled away quite yet in terms of performance.
All right, well, let's bring in someone else who's also looking at value. I want to bring in Mark Travis from Intrepid Funds. He joins us from Jacksonville, Florida. Mark Travis, you've got a lot of cash in your funds right now, or are you waiting to spend money? What's the status with your fund?
Well, Pimm, my perspective, and maybe similar to Charles's or not, I'm not sure, is the last 2 years, share prices through the 1st of March were up probably close to 100%. So I think we're struggling at Intrepid Capital trying to find securities that no one else likes. And we've had to kind of broaden our net in trying to find securities that we feel like are a discount from private market values.
All right. Well, Charles, come in on this, because you've been looking at some securities, but not necessarily in the United States. In Japan, you recently added to your holdings. I know Astellas Pharmaceuticals, that's a company that you focused on, and I think you increased the weighting in your portfolio from about 12.5% Japanese stocks to almost 15%.
Well, more precisely, we had, before the earthquake, around 13.8% in Japan in our worldwide fund. And we've, by buying over the past week, we've brought that up to 15%. But we want to exercise caution, not only because the impact of the earthquake has not been fully quantified yet, but first and foremost because the overwhelming reasons why Japanese stocks are cheap is because managements in Japan don't care about shareholders. And until that changes. Now, there are tentative signs that it's changing, but it's glacial. Until that changes, we are exercising restraints despite the amazing bargains we're seeing there.
Are you adding to your gold position, though?
Yes, we had trimmed our gold, 2 or 3 months ago, a month or 6 weeks ago. We've added back to the gold and we've pleased with that, since the gold has come back, especially with all the turmoil in the Middle East and Europe and China and Japan.
Mark Travis, tell us about one company in the United States I know you've been looking at. This is Speedway International, right? This is motorsports. The Bristol Motor Speedway, the Charlotte Motor Speedway. You like the dividend and you like the stock.
Yeah, I think the perception is partially correct that attendance is down. It obviously is down. And, with close to $4 a gallon of gas, the people aren't going to drive from as far to come to a speedway. But in both the case of Motor Speedway and International Speedway in Daytona, the large share of their revenue is from the TV contracts, which extend out for 4 or 5 years. So that gives them a pretty stable base of revenue. And, in that case, Pimm, we think the shares track today around $15. We think they're worth in the high teens. And I also own some reasonably short maturity debt of Speedway Motorsports as well.
Hey, Mark, it's Julie.
Yes, Julie. I was going to tell Charles, I think what we need to send to Japan is our trial lawyers to shake up management.
Yes.
Well, speaking of
What were you going to ask me, Julie?
Speaking of shaking up, I mean, if you look at the stocks of those Speedway stocks, they've done pretty dismally. I mean, when you get in here, what kind of catalyst do you see that's going to turn them around just quickly here?
You know, I think that's a real good question. I think you're starting to see attendance improvement. I think you're starting to see sponsorships being renewed. And lest we forget, Julie, NASCAR is the #2 sport behind the NFL. And right now, we're not scheduled to have an NFL season.
All right, we got to leave it there. Mark Travis, Intrepid Funds, Charles DeVoe, International Value Advisors, and Julie Hyman from our markets desk. Coming up.